Good afternoon and welcome to this edition of Finweek Money Matters, the show that helps you manage your finances. I'm Nozi Pumbanjwa, and of course my co-hosts are Marc Ashton, editor of Finweek, and Tandisizwe Mahlutshana, Finweek deputy editor. Now, coming up on the show today, we review the Collective Insight supplement and take a look at Finweek's trade of the week. We also discuss why there's a shortage of student accommodation and explore the increase in online shopping. Finally, we explore how entrepreneurs can go about recruiting the best employees for their business. Remember that you can read all of these stories and many more others in this week's edition of Finweek, which is available on shelves from today. The magazine is also available digitally in English and Afrikaans via mysubs.co.za. The financial services sector has changed significantly over the last decade with the introduction of low-cost index tracking products, treating customers fairly, and other legislation forcing business models to adapt. In its current edition of Finweek, we use the Collective Insight supplement to look at the last 10 years in the industry and also to look forward at what the next 10 years may bring on the horizon. Joining me in studio is Anne Cabot-Althauser, head of Alexander Forbes Research Institute, and Nerina Fisser, head of Beta and ETF at Nedbank Capital. Ladies, thank you so much for making the time to join us. Marc, let me first come to you first. Let's talk about the idea behind the commemorative issue, an idea that was taken, I'm assuming, about 10 years ago. What was behind that?
Well, it's quite interesting. The Collective Insight is quite an interesting concept on its own, in that, one of the big challenges you face in financial media in South Africa is just simply quality of reporting in terms of, being able to engage the industry. We love, as journalists, we love our sexy headlines. We love the Liberty blows $1 billion, or we want scandal. We want something, we often gloss over a lot of these issues within the industry, and it's difficult because the industry has evolved significantly over the last couple of years. There's new legislation being introduced left, right and centre. Business models are changing. The traditional powerhouses, your banks and your insurers, are no longer the centres of power within the asset management industry. Products are coming through in terms of low-cost index tracking. The idea that the fund manager is God is no longer is not necessarily it's irrelevant, but it is changed quite significantly. And the more things change, the more they stay the same in a lot of cases. But what you are seeing is an industry that has changed quite significantly over the last decade. And South Africa is very, very interesting just because of the amount of capital that we're seeing in the country. What we did with Collective Insight, and Anne will probably explain in more detail, but essentially what it is you take a group of industry thought leaders, you invite them to submit papers, and once a quarter they then put out, they then vote on what the best papers on a particular topic are, and they're picked by their peers within the industry. And what's been interesting, we managed to keep the concept going for the last 10 years, and with any luck, 10 years going forward.
And let's pick up on a comment that Marc made earlier on. He said the more things change, the more things stay the same. If you were to look at the first issue that came out and the last issue and reflect on that particular journey, are things staying the same, or are we seeing significant changes, and what have been the most significant changes?
Well, what's interesting is that, and what I loved about Collective Insight is that it was a forum in which you could kind of pick the industry up and say, you naughty boys, you're not doing this right, you're not representing these ideas right, you're confusing the consumer. Has that changed? Probably not. Not enough, and you'll hear a lot of that. What Marc says is that there's a lot of change in the types of products and whatever, but I think when you go through the evolution, and I have in front of me this pile of all of the different issues, there are 32 issues, and you go back and you look at the conversations that are in there. The conversations anticipate problems that we're still grappling with as an industry. So I think we're at a really critical point in the industry, a critical juncture, and we have a lot to owe to the financial crisis for that of 2008, because I think it made a huge wake-up call that said, okay guys, self-interest has got to go. We've got a client, we're a professional, it's a service industry, let's get this right. So I think that's the big change.
And having gone through that pile and articles of the last 10 years, what has been the sort of consistent theme that has come throughout the decade?
Ah, boy. Whose money is it?
Yeah.
We had some wonderful, wonderful contributors, people like Rob Rasconi, the use and abuse of numbers. I think of Rowan Williams Short, and even you did a lot of good work in that area. I think responsible investing, you know, what are we investing this money for? What's the whole purpose of investing? This isn't like going down to Gold Reef City. Most investing has to do with some sort of savings framework. And therefore, to what extent are we delivering on that sort of promise? Or are we just out there competing with each other to see who can grab the biggest piece of the pie, you know? And that's really the problem with the industry. That the wonderful thing that this article, the commemorative issue, begins to highlight is that consumers have had enough. They've said, stop competing with each other, give me what I need.
I mean, Irina, being one of the people who have contributed to the issues, I mean, let's talk about how you felt as a player or a catalyst in shaping the industry. And I particularly want to go back to a comment that Anne made earlier, and she said, you know, you could literally feel a change with the coming of the financial crisis. If you reflected on the pieces that you've contributed, would you say that you still hold the same positions today, or would you change some of what you had submitted?
I think a lot of the positions that I held are still very valid. I think it's one of the important things about Collective Insight that this is not, other than maybe other media or journalism in terms of getting the sound bites and the headlines and the short-term information out there. These are issues of longevity. These are considerations that should stand the test of time. So I'm comfortable to say that I think it certainly is, you know, it fits that bill. I'd like to pick up maybe on one of the analogies that Marc used, which I really liked. You referred to, you know, the fund manager is not God. I often think of the financial services industry and the investment industry to be in a very similar position as the religious industry was prior to the Bible being translated into German. Up until that point of time, the knowledge in terms of who knows religion, who understands it, who can make the calls, was just the exclusivity of the learneds, the people who actually could read Latin and read the Bible. And after that became available to the general man on the street, suddenly it became a lot more questioned. It was a lot more debates around it. And I see exactly the same happening in the financial services industry. This used to be the domain of the few people who actually understood how this very complex and difficult thing works. But by making it available to the man on the street, especially through a magazine like Finweek, is such an important empowering mechanism to inform people, to let them understand what it's all about so that they can ask the right questions. It doesn't mean that you have to do it yourself, but you've got to be able to interrogate the assumptions, ask the right questions, and then we can get to that point of what are we really doing this for and who are we doing it for.
Understand that most people are sold these investments. So there's this massive marketing machine. One of the other things that comes out in here, of the huge change that's taken place in the industry over the last 20 years, is our understanding about behavioral finance and behavioral economics. Now let's get really cynical and say that in many ways the industry exploited a lot of behavioral phenomenon like fear and greed to sell its products. Now what's coming out loud and clear is that the great challenge for the next 10 years is to take issues of behavioral finance and get people to do the right thing that puts them into a healthy financial situation.
Before we project forward, let me just ask a quick question, Marc. Who made the decision on the articles that actually made it into the various issues?
Okay, so what happens is ultimately the articles are submitted to a committee which is headed by, which is coordinated by Anne. She will then get her committee together, which will include financial advisors, research analysts, fund managers, etc., and they'll then vote on their peer circle. So there's no, I think that, you know, one of the criticisms you often see of financial media is that there's this idea, well, Nedbank is a sponsor of the industry or of the title, so then they should be given the opportunity to punt their products, etc. This is seriously independent. It is completely separate. It's industry. Literally, you're putting the industry up against each other and being able to interrogate each other. And I think that one of the things that we don't always give the industry credit for is that they, in a lot of cases, they do actually want to interact and work together. They do want to raise the quality of debate. I think, you know, we used to be in this I always call the insurance broker type mentality, where we're all just fighting for whatever few customers we can get out there. The industry does want to contribute, and I think you can look at our financial systems and argue that we are pretty responsible in a lot of the products and offerings that we put out there.
I think just picking up on what Marc was saying, that working together mentality. I mean, you know, enterprises like Collective Insight are there to like police naughty boys and girls out there.
It's not that bad.
It's
we
not
reward
that
them
bad.
too. We reward good
But I'd be interested anecdotally to find out if, you know, you've picked up a difference in how people now engage with clients, they engage with the industry, having read various articles from Collective Insight.
I think there's some really big ones around the use and abuse of numbers. I think there's a lot of change that we were able to advance in structured products, which was a big naughty in the industry. I mean, the industry made a lot of money out of structured products. Structured products fed off of people's fear, and people didn't remotely understand how much money they were giving up to protect themselves. There were one of the ones, Noreen, I think we've done a lot to sort of disaggregate what is really driving performance. I mean, you did a whole thing on smart beta. I remember that sort of helped people understand that not all the performance that they see is a function of skill. It's a function of, you know, systematic, easily replicable things that are out there.
But I think simultaneously also it is about acknowledging the role that people like financial advisors play and how incredibly important it is. Because there was a time when the sense was almost, you know, oh, why should I pay someone else to do this? I can just do it myself. But to highlight the role and the value add that a financial advisor, that a consultant, that the asset manager, that the administrator, each of the chains in the value chain, what they bring to the table and why it is important and appropriate that they be remunerated accordingly as well.
Looking forward, and this is a theme I know it's something that's quite close to your heart, is responsible investing. And I genuinely believe it's probably going to be the subject that's going to dominate discussion for the industry over the next decade, almost definitely. You can see the issues around inequality. I mean, I saw a fantastic article this week. Venezuela is, the stock market is at a record high, and they can't afford to buy food for. So you've got this huge disconnect happening between what's happening in the financial market and what's happening with the man on the ground. Responsible investing, is it going to be the issue that is going to be central for South African investors, product managers and asset managers going forward? I
think absolutely, because if you think in terms of the asset base, the power that resides in that asset base to effect change and to effect change that is there for the greater good of all. And I think the Public Investment Commissioner, being the investment arm of the Government Employee Pension Fund, has really been at the forefront of doing that, to say, you know what, we're actually sitting here on a very powerful tool to effect the type of change that is required for everybody. So when we talk responsible investing, it isn't just about environmental responsibility or about social responsibility. It is about sustainability. It's about not destroying almost the goose that lays the golden eggs, but actually provide also not just for the next 3 months when the next performance survey is going to come out, but rather to say, is this really good for everybody in the long run? And I do think you're absolutely right. This is the theme that will dominate.
How are we going to do it when we've got international players coming into our market, eyeing it and saying, you know, there is a huge chunk of money to be made in South African markets. It's a relatively deep market on the African continent. How are we going to manage those? You know, there's a lot of competition, and you know, I look at what's happening in the US, UK. Yes, there's some positive steps being taken there, but there's still a lot of question marks around responsible investing. Are we going to be able to cope with those pressures?
You know, you can only legislate so much. You can't legislate ethical behavior, and I think that is where the role of the Collective Insight as an industry body almost really is, where we get together and we stand and we can actually say, how do we ensure that we do the best and the right thing for the industry? Very important just to highlight that in that process of selecting the articles, it's all done anonymously, so that really is independent thought. It really is about judging or evaluating the contributions on the content, not on the who or which company it comes from.
We've had some very funny outcomes too, where you've had somebody who might be on our committee who is a bond specialist and read an article and say, that guy doesn't know crap about bonds, you know, and it turns out it's the head of the bond division of one of the big leading asset managers. Some amazing debates around, does this guy even know what he's talking about in this article? So it's very, very much peer review focus.
So on that note, unfortunately, I have to close this session. So we'll close it on independent thoughts, which I thought was a very significant point made there. Thanks again to our guest. That's Anne Cabot-Alsterhauser, head of Alexandra Forbes Research Institute, and Nerina Visser, head of Beta and ETF at Nedbank Capital. Time now for a quick look at our Finweek Trade of the Week. This week's Trade of the Week is African Bank. Now, Mark, we heard the news yesterday, Coronation upping their stake in Able, albeit, even a small and up. Clearly confident in terms of the outlook they have for this particular stock. Why are you on the other side of the fence?
Tandisizwe and I think we disagree a little bit on this, but so...
I'm going to go with Tandisizwe, right, because... All right, okay, but let's get your comments first.
So I think one of the things that's interesting, I actually learned last week, one of the big asset managers in South Africa is actually shorting the stock quite significantly. Look, everybody, a market is made of buyers and sellers, so I get that. But he genuinely believes that the market for African Bank, the company is likely to implode at some point in the future. And his argument is that cannot afford the cost of capital, and the business model simply is no longer sustainable. Rights issue was good, it'll kind of keep them up, and I think it was issued at 8 Rand. That tells you a lot about what's happening with that company. We've seen with Tony Fourie leaving the company recently. They got a management challenge there. This is a tough business to be in. And remember that a lot of what happened with African Bank was its appeal to international investors, those who were snapping up those bonds left, right and centre, and they took them at a very, very expensive rate. There are some significant challenges. You've got AMCU and the strikes, etc. It's going to weigh on the target market.
Tandisizwe, why would you be banking on a stock that's come down so hard in the previous year?
Look, I think that the model is really under pressure. The whole industry is under pressure. Marc is talking about all the debt that was brought in at a very high rate. I think there was an announcement late last year, or somewhere in the middle about last year, about they were looking to get rid of all those bonds between 2013 and 2014, and they'll actually bring in debt that's a little lower than the rates they had. There's still problems. We don't know where earnings are coming from. People are still struggling to pay their monthly commitments. But I think that there's still a buying opportunity for people that are not looking to shoulder in the current noise. The noise is very heavy at the moment, but I think if you're a long-term investor, there is value there. I mean, the PIC upped its stake last year around May or June to 15%. I mean, and they're still holding on. So I mean, there's people that believe in the story, there's people that don't believe in the story, and I don't think neither is wrong or right.
So it seems as if we're on the fence on that, and Tandisizwe emphasizing a long-term investment.
But people going with Marc